Greetings. Have you heard of an interest rate buy down? This is a good way, a good workaround for buyers to temporarily lower their interest rate to make their mortgage payments much more affordable. Now we know interest rates have really increased lately. They're forecasted to, continue to remain high for quite a while. We don't have any control over it, but rather than waiting for them just to come down or waiting for a good deal to fall in our lap, let's get out there and work for it. And one workaround again is this interest rate buy down. So how does it work? Let me explain. So, an interest rate buy down is a mortgage financing technique with which the buyer or other party attempts to attain a lower interest rate for at least the first few years of the mortgage, possibly its entire life. Now, there are two types of interest rate buy downs: a permanent buy down and a temporary buy down. So, the permanent buy down, that's where it means we refer to its entire life. That's not what I want to focus on today, because my strategy to help buyers right now is to do a temporary interest rate buy down. And this is how it works. So this is a financing technique allowing certain parties to pay a buy-down fee to lower the interest rate and thus mortgage payment for a temporary period of time at the beginning of the loan term. The secondary aim and my strategy for buyers is to refinance the loan when the interest rates improve. So I'll explain that more in a little bit. You do have to pay a one-time fee known as a subsidy fee, and it is this that subsidy fee is put into a custodial account or type of escrow account that is held by the lender. Now, these funds can't be used to pay for anything else. So, as you go through your loan, if you incur some late fees or missed mortgage payments, you can't use this extra funds to pay that difference. This is only for the well, you can to pay that. I'll leave it at that. Buydowns do require a signed buydown agreement. So the buy-down agreement will show what your monthly payments will be through the initial term and life of the loan. Your regular note won't show it, so that's why you have this buy-down agreement to help show that. Common options include a 3-2-1 buy-down, a 2-1 buy-down, and a 1-0 or 1-0 buy-down. Most common is going to be a 2-1 buy-down, but I did see one builder here in the Austin Round Rock area that was offering a 3-2-1 buy-down, so that's more rare. But if you find it, go after it. And the good thing is this is available on all 30-year fixed rate conventional loans, FHA, VA, and USDA mortgages. So you have a lot of some good options with that. And the 30-year fixed rate, in this case, really applies to the conventional. I think you check with the lender on policy limits, but you could do maybe a 15-year or 20-year note with the FHA, VA, USDA, etc. So who can buy down a rate? Again, my strategy here is to really get the seller or builder to make this contribution. Any of these parties that you see here, here's my pointer, um, can make that contribution. But the real goal here is a seller. And why would a seller want to do it right now? Because we're in this Austin Round Rock current market, there is a lot more inventory, right? Houses are sitting longer on the market. We've seen a lot of price decreases since really late May, for sure June. Every week, I'm seeing 17 to 2,200 price decreases every single week with this 7-day period. So buyers can be more picky. They have a lot more options. Sellers have to stay at the negotiating table in order to sell. Yep, if they have a pretty nice house, with a lot of good upgrades and desirable features, you might have 2 or 3 offers on a home. But there are a lot of homes that have been sitting on the market that don't have any offers on the home, and I'm talking like several weeks. So sellers, have to really negotiate. And one thing that I try to go for my buyers is to help them again overcome these higher interest rate is to negotiate with a seller to pay for this temporary buy down. Now, again, so they are an interested party, and there can be contribution limits. So you need to check with the lender for your type of loan. Are there any limits on that? Other possible lender limits that I went through or that I've seen is, and I just quoted it here for you, offer may not be redeemed for cash or credit and is non-transferable. And the offer cannot be applied, retroactively. So if you already have a loan, you can't go back and apply it. And it may not be used when, excuse me, may not be used with any other discounts or promotions. So again, check with your local lender on any limitations there. So how does it work? Let's go through the example of a 3-2-1 buy down. This is the max. Again, this is not very common at all, but it's possible. In this example, this is for a loan amount of $300,000. So in year one, you are going to pay $300,000, and their interest rate that you're qualifying at is 7%. Now, in the first year, you're going to be at a 4% interest rate. So that's where the 3 comes in the 321 buy down. So your interest rate is 4%. Your monthly payment of principal and interest. So this isn't including taxes. This is not including your insurance, and those can slightly fluctuate a little bit year to year. This is just your principal and interest. Your payment is going to be $1,432.25. So your actual savings for that per month is $563 and change. So in that entire first year, you're going to be saving almost $6,800 per year. That is just crazy. That really makes your monthly payment a lot more affordable. So what's happening here? I'll explain now. Is your payment is and stays the same at 19.95 and 91 cents because you're at the 7% interest rate. What's just happening is that seller that we've negotiated to, the interested party, has contributed money into that custodial account to pay the difference. So going back to our year one example, you personally are paying $14.32 per month. And where's that deficit of $563 and change coming from? It's coming from that custodial account that's being combined to make sure your payment every month is still $19.95. So makes sense. Going on in year two, the interest rate is increasing or is increasing 1%, or in this, or another way to say it is, it's going down 2%. It's that 2 in the 321 buy down. So you had 5%. Your monthly payment is $1,610. You're saving $385 per month. So your total savings is about $4,600. In the third year, it's going down just 1% to 6%. So as you can see, your payment is almost $1,800. You see your savings and you see your annual savings. But starting year four, so now the temporary buy down has ended. Year four and the rest of your loan life is at the 7%, and so your payment is returning to 19, or the your portion of it is returning to 1995 for every year on. So the typical cost of the buy is roughly equal to the amount the buyer would save in payment. So how much is this going to cost? Well, if you add up the annual savings for each of these years, you're going to come out to $13,756. So in this example, the seller has at least contributed that much money has to at least contribute that much money to really enable this to work. There is no negative amortization here. So again, the buyer, like I said already, the other party is funding that deficit in payment each month to the lender. Again, in a more common example is this 2-1 buy down, and I increased the loan amount here to kind of be more, if you take the Williamson County, so Round Rock, Pflugerville, Leander, at least for September 2022, the median listing price is $455,000. So this example from my friends at LendFriend, we did a loan amount of $500,000 and a 30-year fixed year loan. What would your payments look like? That first year, it's $2,838.95 at a 5.5 interest rate. So in this case, the total for 500,000 loan is 7.5%. So in that 2-1 buy down, how many interest points is it going to lower? 2. So you're at 5.5%. Each month, you're going to be saving $657.13. That is a real savings. It can really help you make that home more affordable the first year. Second year, it's going to increase to just 6.5% interest rate. So your monthly payment increases to $3,160 and change. So that per month, you're saving $335. In this example, I didn't calculate the the total annual savings. Well, I did in a minute, but it's not shown here. And then again, third year and beyond, you're paying again the full payment of $3,496.07. Again, the goal of this is, again, it gets you a lower monthly payment each month, and then we're going to be watching those interest rates, and when they come down enough, again, usually about 0.5% is what it's going to be. Um, you're going to try to refinance to get when the interest rate's really lowered. Again, check with your lender to have them run the numbers right. Again, like I said, it's usually a 0.5%, but you're also going to be paying lender fees because you're refinancing. You're paying some lender fees again. So that's why you want to have them run the numbers to see, okay, what's the break even point, or what's the at what point am I really going to save and worth it? If it's just decreasing 0.25%, you may want to wait longer, but increases more. Excuse me, it's going to definitely be worth it. So, um, yeah. Excuse me. All right. So in this case, the subsidy fee, how much is it going to cost? It's going to be about $11,914.32. Now, what happens? Let's say in this scenario, a seller gave you 3% of the sales price. That's $15,000. So we know $11,914 of it is needed and going to go towards this temporary buy down to fund it, right? But what happens to that remaining balance? Well, that can go towards your closing costs. So that can really again lower your closing costs when you close on the home. That's about $3,100 there. So it can be used for both, which is really nice. Now this is a comparison chart. As I put here at the bottom, you definitely want to verify things with your lender on their internal policies and what they're offering. But this is kind of just in general showing when we talk about Freddie Mac and Fannie Mae, the government who kind of helps set a lot of policies for loans that lenders and their investors kind of help follow. So you want to check to make sure you're seeing the latest guidelines and any internal limits that your lender is going to have. But in general, these temporary interest rate buydowns are allowed with a fixed rate loan. So we just covered that, right? So yes, and I put here temporary buydown permitted for home possible. I think that's a certain program for you wanting to 2 unit properties. Most of you probably just doing one single family home. It is allowed with ARMs. So these are adjustable rate mortgages. ARMs are another great way to temporarily lower your interest rate. That should be a whole other separate video, but it is a type of interest rate loan. So it is allowed with some of those. Again, in this case, they're telling me ARM must have an initial fixed rate for 5 years or more, and if you're doing a 3 to 4 unit primary residence, 7 years or more. That's my dog here. The max buy down percentage is 3%, so that's why the maximum that you currently see is a 3-2-1 buy down, and the max rate increase per year is 1%. That's why you're seeing it in steps. That's why it's a 3-2-1 buy down or a 2-1 buy down. As we covered in our examples, the interest rate changed 1% because that's the max that it can change per year. Max down buy down period is 36 months. That's why it's 3 years. Exclusions. So you cannot be used on investment properties. Sorry, investors. Cash out refinances, certain ARMs, these adjustable rate mortgages, or manufactured housing. That's your mobile home type of housing, manufactured housing. Can an interested party fund it? Yes. There are maybe certain limits. So you can check with your lender. And what qualifying rate should it be? It has to be at the note rate. So if interest rates, for example, are currently 7.25%, you have to qualify at that 7.25%. Even though the first year you may be getting it at 5.25%, you still have to qualify at the 7.25%. So again, you definitely just want to make sure you're verify things with your lenders. Let's see here. So other notes that I've kind of put for you. What happens if, once you buy the house, you decide to sell it before this temporary buy down ends, or you try to refinance before it ends, which is the goal really. That remaining subsidy fee is essentially refunded to you. So that can help you pay for those costs of refinancing. If the seller doesn't want to pay the full subsidy fee, maybe they just want to pay 2% or 1% or a certain amount, I'm gonna give you just $10,000. Can another party pay the difference? Yes. I mean, let me step back. If that happens, maybe you're just doing a 1-0 buy down fee. Or again, maybe you try to get another party to pay the difference. Well, yes, if the loan limits allow for that other party to do so, and remember that buydowns do need to be disclosed on the loan estimate that you'll get at the beginning when you apply with your lender, and then on the closing disclosure, that CD at the at least 3 days before the close of your property. Excuse me. So can gifts be used to pay down these buydown fees? So if you don't know it, if you have family or friends that want to give you some money to help pay for your closing costs or down payment, whatever. Um, Sometimes people that can I use those gifts to do this interest rate buy down? Yes, as long as that is coming from the buyer. So they're giving it to you, the buyer, and you're using that to fund that buy down fee, that pay that subsidy fee. Can funds go in part to a temporary buy down and permanent buy down? Yes. For the sake of time, I didn't go over permanent buy downs, but if you wanted to split that, you can. The real benefit of a temporary buy down is that the permanent buy down does save you money in the long term, but on a per month basis, it's really going to lower your payment maybe $40, $50, depends on how big of a purchase you're making. But you know, we're so in the long run, yes, you're going to save because you're buying down your interest rate permanently, but it's going to take more money upfront to do it, and it's only going to lower your monthly payment by, again, 40, $50. Whereas a temporary buy down, as I showed you, you're really lowering your payment by a couple of $100 each month for, that initial term that you have. But you can do both, so that's great. Can the seller, builder, or and lender share the buy-down costs? Lender probably isn't going to do that, but yep, they could if if you can negotiate that. So that's great. Are there prepayment penalties during the buy-down period? So if you want to pay extra, is there a penalty? No, unless the loan doesn't allow prepayments. Like some arms don't allow it. So some pros and cons. They kind of correspond here. At least the first three do. So um, the pros, again, to recap everything, and show the benefit for you, is it does reduce interest rate for a short time, lowering the borrower's mortgage payments during the initial term. The con is once that temporary buy down ends, your monthly payment is going to increase, and that could maybe shock you a bit. But it really shouldn't shock you because you know from the beginning, okay, the first year, this is my monthly payment, and the second year, this is what it's going to change to. And then, third, and whenever it ends, this is what my payment's going to be. And remember, you should be able to afford it because you qualified at that higher interest rate. It can be a negotiation strategy, allowing you to pay a lower mortgage payment, you the buyer, and the seller avoids or minimizes lowering their list price. So it's kind of a win-win. Yes, the seller is still giving you money, but it's coming out of their sales proceeds, but they don't have to lower the list price. Rather than doing that, they can try this other negotiation strategy. So that's one thing I would advise too, the sellers, rather than having to lower your price, try offering a 2-1 buy down. It just makes it more affordable for a buyer to be able to buy your home. um, but the two con is buy downs may not be an option for certain loan types or property types. Remember, it can't be for a manufactured housing. Maybe some arms may not allow it. So again, check with your lender to make sure it's allowed, that you're wanting to do this. How does, is it allowed? Run the numbers for me. Three, option for home buyers whose income will maybe increase in upcoming years. So um, I don't want to be paying that much money right now, but if I can use interest rate buy down, it does make it more affordable for me. And I know that I'm going to get a new job or a promotion. So, in the next 1, 2, or 3 years. So that could be good for you. But if you're on the flip side, if you're counting on that, what happens if that doesn't happen? Then you may struggle to make. I wouldn't. It may not be so much of a struggle, really. I think it might be more you're using more of your monthly income to pay your mortgage. You're using more of that income, percentage of income than you had preferred. So, but you should still be able to afford it. Let's see. Again, the goal is to refinance when interest rates improve enough. So again, have your lender run the numbers before you do it. Number 5 is you avoid waiting for interest rates to go down. Again, we can't control the interest rates. We can't control the market. Again, this is really a workaround rather than just sitting and waiting for it to happen. Hey, let's use this strategy to lower the interest rates temporarily so that I can go ahead and buy the house now rather than waiting. And then again, when things improve, let's refinance. Or if they never improve, then at least you were able to save, for the first couple of years. And again, take advantage of depressed home prices. Right now, guys, at least in the Austin Round Rock area at this time of the recording, home prices have really decreased, and so let's try to take advantage of it, right? Because once interest rates do come down, more buyers are going to come into the market, right? So we have more competition, and housing prices, we don't know what that can be. They could increase, they could stay the same, they could decrease. So let's take advantage now before interest rates come down and get more buyers into the market. So is this buy down right for you? You need to ask yourself these questions and answer. How long do you plan to own the home? If it's going to be a short period of time, that would be especially even helpful. Can interested party contributions be negotiated? So when before you offer that contract or in your counter negotiations and whatever, is the seller willing to contribute that? And there are some sellers, not every seller is, but there are some sellers. And so are you willing to, go out and work for it? That's where I come in. Let me help you find those deals, or if not, let me help you try to negotiate for it and make it happen. Again, I love that line. Are you just waiting around for a deal to fall in your lap, or are you willing to work for it? Are you comfortable with the risk of your payment increasing? Again, some people like uh, a fixed mortgage payment. Maybe you're on a limited income, you're retired, whatever, and you don't want to risk that increasing. So maybe you're not as comfortable with that. Is it likely that your income will increase? Great. What if it decreases? Will you still be okay? Do you anticipate any major expenses coming up? Tuition, new car, remodeling. So again, yeah, I'm paying the lower mortgage payments so I can afford both my new car too. But then what happens when that interest rate buy down, ends and you're not able to refinance quite yet? Maybe it takes a little bit longer for you to refinance or whatever. Now you're maybe struggling more to pay both because your mortgage payment, your portion of the mortgage payment has increased, right? Because that temporary buy down ended. What are your payment expectations? And again, have your lender explain your options, run the numbers, okay? So hopefully that was helpful for you guys. I'm here as your real estate resource, so feel free to call, or private message me, whatever, with any questions. Reach out to me. Um, be sure to follow me on my other social media channels. I am on Facebook and LinkedIn and Instagram and YouTube, where I have more videos on tips, explaining things, market updates, Austin life. Some fun things to do in Austin, and kind of living basically recommendations. So I'm happy to again to be your real estate resource. Until next time, guys.